Welcome to 5 and 5 with Miller and Mango, your go-to source for all things finance with a twist of culture infused into every episode. Join your hosts, seasoned financial professional Miller and marketing maverick Mango, as they discuss 5 of the latest market and cultural trends and help you instill common sense into the ever-changing landscape of finance, all within 5 minutes. It's time to dive into the numbers, unravel market mysteries, and discover the strategies that matter. Welcome to 5 and 5 with Miller and Mango.
Hello and welcome to 5 and 5 with Miller and Mango. I'm your host, Mike Manganello, with my co-host, Miller Hoffman.
Excited to be here, Mike.
All right.
Thanks for having me.
Episode 11. Let's roll right into it. This was a big week on Wall Street behind some upcoming Fed decisions as well as some earnings reports, especially within some of the bigger tech companies out there. I would love to know the psychology behind speculation and quarterly reports that do come out.
Mm-hmm. Yeah, and for some reason, and I think for some good reason, but we see these large companies really report their progress or their earnings on a quarterly basis. So a lot of people will watch Apple and Microsoft, which are companies we'll talk through here in just a bit, really closely to see what their earnings per share, or sometimes abbreviated as EPS, was. Even though that can be a way to track a company's health, it can be a detrimental one. If you're holding stock, generally it's going to be advisable for you to hold it for a long time, not just a quarter or a handful of months at a time. So, Mango, I think that's where some of the speculation comes from. People looking to forecast or trying to guess what the EPS will be each quarter, which can be, again, pretty dangerous if we're judging an entire company's value on just what their earnings for a particular quarter was. But people study this in finance. There's this concept called the efficient market hypothesis, where people study how efficient do markets incorporate new, both public and private information. So different countries, there are different markets where different arguments can be made. The U.S. tends to have a weak form, is what we call it, where other markets and countries that run the markets may be in a medium space or a more stronger form. So I think that's where some of the speculation comes from.
Try not to play into speculation. Don't go into the roller coaster ride that could be the stock market.
That's right.
Probably a lot of times the price is already built into that stock price as well, knowing what might happen.
That's right. By the time you read it on the headlines, don't think you can trade adequately on the headlines. You can find yourself be pretty disappointed.
So talking about two powerhouse stocks, one Microsoft, two Apple. Most recently, Microsoft's price took over Apple. Mm-hmm. I think a lot of people find surprising, me particular, because Microsoft is something I'm older that's relevant to me, where Apple is something for the younger generation that has been kind of the promised child of the stock market.
Right.
So what has happened over the last couple of years, I guess, to get to this point?
Yeah, it seems like Microsoft has just more of a breadth of presence than Apple does at the current moment. And I mean, we're talking about two extraordinary companies here. So to compare and contrast seems unfair. We're talking about Clash of the Titans here. But if you think about the breadth that Microsoft has between not just the computers, that tends to be what comes to my mind, but things like cloud storage, and they're really getting into the artificial intelligence game, the gaming industry. They're really popular there too. So where it seems like Apple is a lot of the bread and butter is on the cell phone, iPhone obviously, presence, which can be really good for them, but sometimes not so good if that's really their prime product. I did some interesting looking, and I want to be quick here. I know we don't have a ton of time. A lot of people just really hold Apple or really just hold Microsoft in their portfolio. I want to share with you the 5 largest companies by decade for the last 3 decades. I think this will be fascinating. Yeah. In the 2000s, we had Microsoft, Cisco, GE, Intel, and Exxon. In 2010, it was Exxon, Microsoft, Apple, Walmart, and Berkshire Hathaway. In 2020, so just a couple years ago, we had Microsoft, Apple, Amazon, Google, and Facebook. So if your financial plan or your investment strategy is to just hold a couple of the high flyers right now, it's probably a bad investment plan. Be diversified and be able to adapt with the market as new companies and new technologies come into play. Don't just fall in love with the Apples or the Microsofts, which may have done really well. And Microsoft's held on through the past, couple decades, but don't become obsessed with just one company, I guess is what I'm saying.
That's interesting. A lot of those companies you mentioned all have pivoted into other areas to grow and show revenue, where not like Apple hasn't, but really they really haven't innovated beyond the phone and the tablet. They have Apple TV, but all the virtual stuff they're doing, but I feel like not like they're stale, but there hasn't been anything really new there.
Yeah. I think that's a reason for the article that you found as well.
All right, something I found interesting, Miller, you brought up to me outside of the podcast was article just came out about Visa and MasterCard prepare to raise credit card fees. Merchants could end up paying an extra $502 million annual in fees. Meaning every time you go and you use a credit card, you're going to be paying more because of that. Right.
Yeah, those convenience fees aren't so convenient when it's coming from your pocket. I have to give a shout out to my mother for bringing the topic up here. I think it may be connected to just this idea of, you'll recall during COVID, a lot of businesses not giving change back or having, signs very clearly posted saying we don't take cash, we strictly take cards. And I guess there's a handful of people still out there who still write checks, but I jokingly say this, but it's real. If you're watching any type of live TV, like a sporting event or, something like that, it is almost guaranteed you will see a credit card commercial. Mm-hmm. Think about Discover and Amex and Chase. I mean, these companies come after you so hard, and because they're incredibly profitable. So I think this is one way they're trying to make themselves, again, even more profitable, try to further solidify their stance here in the payment processing industry.
So pennies are coming back. Cash is king.
I guess pennies are coming back. With inflation, though, the pennies are worth just a little bit less, it seems. But that's right. What's next here, Mango?
All right. The upcoming Super Bowl in about a week and a half. So I wanted to kind of dig into the economy behind the Super Bowl. And I have some fun facts for you.
Sure.
What do you think the average price of the ticket to the Super Bowl is this year?
Oh, I could only imagine. I'd have to guess in the tens of thousands of dollars.
Wow, you're good. $10,000.
Oh, really?
Incredible.
Okay.
In the past, it was around $2,500 or $3,000.
Oh, wow.
I think with the influx of money, inflation, as well as it being played in Vegas, the going rate for a ticket is $10,000.
$10,000 for a game.
Takes out the regular fan or most fans that want to go to the Super Bowl.
Wow.
And then from a marketing background, I always find it fascinating. What do you think the cost of a 30-second commercial? And this is just to say I want to add to air the commercial versus producing it. So
I'd have to guess in the millions, or at least the hundreds and hundreds of thousands of dollars there per 30-second bit here. Share.
$7 million.
$7 million. Wow.
$7 million.
It's a lot to pay for to grab all the eyeballs watching the Super Bowl, though.
Yes.
Maybe it's a deal.
Yeah. So I always find it fascinating. Should be a good game. I've always watched. I've never been. I said I would only go if the Jets would ever be there, which means I might never go. Early on, who do you think takes it, KC or San Fran?
I think it is tough to bet against Mahomes and the Chiefs right now. It seems like they always just play so well in the playoffs, and they have the record to prove it. But San Francisco's won a couple really close ones, but they have quite the personnel this year. Who do you think?
If I were a betting man, I'm going to go KC last-minute field goal to win.
All right.
8-point game.
Here we go. Locked in. That's your final answer. Very good.
All right. Explain it to me like a fourth grader as we are on the eve of entering February. We're in the heat of tax season.
That's right. So
can you really just really quickly explain what tax season means?
Yeah, of course. And this is a common gripe here for us as Americans. No one really ever sat us down to tell us about what our taxes and how to file. But man, we do know calculus and geometry. I see a lot of people griping about that. So Mango, tax season is for most individuals here. So there are some caveats for businesses, and some estates have different timelines that they work on. But it's generally the first few months of the year, coming up till April 15th. is the deadline for this year. Sometimes that changes if April 15th happens to fall on a holiday or a weekend. But generally around the middle of April is what's deemed tax season. So you will get important tax documents in the mail. Virtually everyone does. If you're working, probably a W-2. If you're working more of a formal 9-to-5 job, let's say, W-2s, expect 1099s from investment accounts, or as you're taking distributions out. Expect forms related to health insurance, proving if you're covered or not, or as you've put money away, maybe in health savings accounts, would be valuable for you to know. So everyone's really quick to try to compile their documents here quickly, but be patient. Sometimes different institutions, TradeWinds included, it takes us a couple months to put it all together and get it out to you. So that is tax season. Mm-hmm. For the most case, it is too late to plan tax-wise for this year. Of course, some accounts you can still contribute for the following year, or for the preceding year, rather, 2023. But now is the time to really start planning and thinking about this time next year come tax season. So review your withholding. Yeah. Go ahead and adjust your 401k contributions, starting to think about your estimated quarterly taxes, if that's where you are, or making charitable contributions. So start planning around it now is much more viable than trying to backtrack or rewind.
Yeah, I think for me, going back to the Super Bowl, the official kickoff is Super Bowl Sunday, where every other ad is about H&R Black.
Oh my gosh, absolutely.
Free taxes
TurboTax.
That's
right.
Tax.
They burn it up.
You'll have an ad.
That's it for sure. So that's tax season in a nutshell. That's
the
simplest thing with taxes right there.
Awesome. Well, thanks for listening again. It's been great. Episode 11. Everybody enjoy the Super Bowl. We will be back around the Super Bowl with hopefully the award-winning Patrick Mahomes and Chiefs.
Yeah.
Have a great day.
TradeWinds LLC is an investment advisory firm that is registered with the Securities Exchange Commission. Registration does not imply a certain level of skill or training. TradeWinds will not accept trade offers online, and any such request, orders, or instructions that you send will not be accepted and will not be processed. This presentation has been provided for informational purposes only and is not intended as legal, tax, or investment advice or a recommendation of any particular security or strategy. The investment strategy and themes discussed herein may be unsuitable for investors depending on their specific investment objectives and financial situation. Information obtained from third-party sources is believed to be reliable, though its accuracy is not guaranteed. Opinions expressed in this commentary reflect subjective judgments of the author based on conditions at the time of the publication and are subject to change without notice. Past performance is not indicative of future results.